Hello viewers, welcome to ILC Bala. We are connecting after a month. I was slightly preoccupied with online virtual classes. In today's video, I'm going to discuss one of the important tool that I have created with respect to EPF, Employees Provident Fund. How to generate ECR. This will help professionals, employer, employee to understand the concepts of calculating provident fund under various heads like EPF, EPS, EDLI based on various provisions and in light with the recent amendment that happened in 2014 confirmed by the Apex Court finally in 2023. So there are various intricacies that we need to understand in preparing ECR. Now I have created this tool using Excel. It's an Excel based software kind of a thing, okay, macro driven, as a tool that would help us to understand the provisions and prepare the ECR. So let's look at it. This tool will come with a home page giving you the details, the essence of this particular calculator, ECR text file preparation. This ECR Excel file will help the user to prepare a final ECR text file for uploading into the EPFO portal. Preparing ECR text file in compliance with various provisions of the EPF Act is vital. Contribution towards Provident Fund, Pension Fund depends upon various conditions like higher contribution, higher pension, no pension. The user will be guided through the information in the notes sheet on how to select each options in the input sheet depending upon the conditions related to the establishment and the member. We have made every effort to provide a compatible ECR file. However, request the user to verify with the EPF Act for its accuracy. It's a disclaimer, nothing special. So let's dive into this particular tool, generation of ECR. We're going to accept and go into it. So once we accept, it will throw a pop-up message. Welcome to ILC Bala. We will be decoding the labor laws. That's our main object. User are advised to go through the click info that's available here, right? Okay. Before feeding data for analysis. You will be given a time frame because I'm going to provide this demo version to all of you for you to test and sharpen your skills. Once you are convinced, then you can go for a commercial version by purchasing it. So as of now, for 10 employees, a demo version is created. Of course, you can subscribe to our YouTube channel. So these kind of tools will be specifically available only to our students, online class participants, and subscribers of YouTube channel. So let's get into it. Now you look at it, it's a very comprehensive calculator. Taken time to create this with highlighters to explain how it works and what are all the various options available. Okay, so we have a different heads, columns, which we need to select in order to calculate the PF contribution. This is how it works. Okay, this is the sheet. Okay, maybe let's reduce the size of the sheet so that you will be able to easily have a look at it. Okay, fine, just a moment please. So let's dive into this particular sheet and understand things. Now you look at, we have various columns here. Column number 1, contribution for higher pension before 1st September 2014. So are we making any contribution for this particular employee? It is for each employee. Okay, we are going to calculate and see and understand. Okay, so before I start, what I will do is let's remove all these conditions and do one by one so that you will understand things better, right? So let's look at it. Okay, now how to select this higher pension? What is the basis on which? Because we have to select here, yes, no. Then next column you come, you have to give the date here. Okay, then next comes whether higher or regular, then comes next same higher or regular, then whether higher pension is there or not. So these are the conditions that we need to select in order to calculate what will be the EPF wages, EPS wages, EDLI wages, then the contribution that need to be remitted, right, and NCP days and refund advance if anything is available, we have to provide. Fine. So let's understand things first. Say for example, for this particular employee, okay, we'll take one example and try to understand one by one. Okay, this is the UN number of that individual and the name of the individual. Say his gross wages is 40,000. We are going to take his EPF wages as 35,000 or maybe whatever it is. Okay, actual EPF wages. Okay, so what is PF wages? You need to look at the provision, understand what it is, right? We'll look at it one by one. So for example, higher pension. How do I select this, yes or no? Let's go and look at what is given in the detail. You can look at it. Just a moment. We'll go and have a look at each one by one. Now we have come here. We have to look at higher pension. Where is it declared? How is it declared? Yes, it's coming here. You have to look at it one by one. Okay, so that will help you to understand things better. So let's look at the provision. Higher contribution, higher pension contribution. What does it say? The existing member as on first day of September 2000 who at the option of both employer and employee have been contributing on a salary exceeding 15,000 per month. Okay, you understand? That is an existing member. That means who was a member, who is already employed and member before 1st September 2014 and has been contributing for higher pension, okay, and has given a joint declaration and the same has been accepted by the department or EPFO. In that case, higher pension eligibility is there. In the case of new entrant whose salary is less than 15,000 rupees and joining the establishment after 1st September 2014, and once he reaches the threshold limit of 15,000 of wage ceiling, he can opt for higher pension within 6 months with a joint declaration. So this is what this selection you have to make. Okay, so we'll go back. Assuming this person was already an employee prior to that, we will take this into consideration. So we have made a selection. Okay, yes, he is a member earlier and contributing. Okay, right. Now next option, we will look at it. Date of joining impact. Since he is already a member, that means his date of joining should be prior to 1st September 2014. Say we will just put a date prior to 1st September 2014. Okay, just we'll put a date. If you don't put also, it will not consider because you have given here yes. So obviously this will become irrelevant unless otherwise you give a date on or after 1st September 2014. Okay, now next let's look at the next one. Say the employee is making a contribution. Can I see before we go to that particular this thing, let's look at what does this particular column requires. Let's understand the provision. Higher pension contribution. The existing members as of first day of September 2014 who at the option of both employer and employee have been contributing. Okay, so that is the reason that they are taking this into account, right? So now let's look at the next one. Employee contributing. Can an employee contribute? Let's look at what is his contribution, whether he can make contribution regular or higher. We have a chance here, no? Whether it should be regular or higher. That's why it's a regular means is equal to PF wages max 15k. Higher means actual PF wages. That's how we will look at it, what it is, right? First let's go and see. So now look at it. Employee's choice of contribution. Employee can make higher contribution over and above 10% or 12% as the case may be. 10% for voluntary registration and 12% for mandatory, compulsory. That is unexempted establishment. The establishment which has 20 or more employees have to be covered mandatorily. So in that case it is 12%. Otherwise it is 10%. Okay. So employee can make higher contribution. However, the employer is not obliged to do so over and above the statutory requirement of 12% on wage ceiling. Okay. So let's go back and look at what it is. So we can make a selection here. Say I am saying, okay, let's say higher contribution. Okay. Now let's go to the next column. What does it say? Employer higher contribution. Is it there or not? We will have a look at it. Okay. Now let's look at it. What does it say? Employer choice of contribution. Employer need not make higher contribution over and above statutory requirement of 10% or 12% as the case may be. Okay. So, however, if employer is making higher contribution, the employer has to make the equal contribution. Correct? So let's go back. So we will also select here the employer is making higher contribution. We have done all those selections. Now you see this columns will change automatically depending upon that. Now we'll say last column, higher pension. Let's look at what does this column say. Let's look at where is he? Yeah. Pension, higher pension. Employee can opt for higher pension under two circumstances. What are they? Date of joining prior to 1st September 2014. Yes, this employee. Both employer and employee have opted for higher pension. Yes. And higher pension through joint declaration accepted by EPFO. Yes. In case the employee's PF wages crosses for first time, that's the second scenario. We have not touched it. We are only touching the first option. Okay. So in that case, what we will do, we will select this also S. Now look at it. Look at this. What is EPF wages? Now EPF wages is 35. Why? Because higher contribution has been selected by employee and employer also. So what happens? Because of that, EPS wages is also higher. We are going to look at other options also. Okay. Then EDLI, of course, under all circumstances, EDLI wages will be restricted to 15,000 rupees. That's correct. Now look at the contribution. You can see the contribution calculation. 12% on 35,000. The employee's contribution fully is going to the Provident Fund. Now employer contribution on EPS 12% is bifurcated because he is already a member and making a higher contribution. So 8.33% of 35,000 is going to the EPS, that is pension fund, and balance is going to the Provident Fund. That means this person is going to draw higher pension and eligible for higher pension. Okay. So let's look at the second scenario. What will be that second scenario? We will look at it. Okay. Right. Say for example, he was, that's why you can see that changes will make automatically the colors. Okay. Now let's assume he was earlier a member. Now he was working with a different establishment where he was making higher contribution and he was a member. Now he is coming to the new establishment, say after 2014, 1st September. Let's take the 1st September. What will be the situation? Okay. Let's look at it. 1st September. Now, who is making contribution? The employee is making higher contribution. Sorry. Employee is making higher contribution. Employer also making higher contribution. Okay. And they wanted, can they go for higher contribution is the point, right? Let's look at it. He is also making contribution. Though he is coming and joining here, he was contributing earlier and he is also coming here. He is continuing to do so. What happens? The situation, you look at that situation, that remains same. You look at it. Though he is coming and joining later, okay. Okay. So you can look at it. He is joining the new establishment and there also the contribution is on the higher side by both employer and employee. So the situation remains the same. There is no change. You can see the contribution, EPF wages, EPS wages, EDLI wages, then contribution also remains the same. Moving from one establishment to the other establishment where there is both the options available. Okay. Now let us look at a scenario, next scenario. For example, let us select no. In the first scenario, we will try to implement through a no condition. The date of joining is also before 2014. Sorry. I'm sorry. We have to enter properly the date. Okay. Sorry. Let's look at it. Okay. We'll look at it here. Now what is that selections we will make here? We'll select the same option. We'll try and see, because there is no higher contribution. Now he's trying to make the contribution. Let's look at it and see how it works. There was no higher contribution earlier. Okay, though the date of joining is also prior. Now you are coming and making higher contribution. What will happen? You will look at it. The EPF wages is 35, whereas EPS wages is only 15,000 rupees. Of course, EDLI will remain the same. Let's look at how the contribution is getting distributed. Now, employees provident fund, there is no change. It is going to be the same, because the impact is only on the pension component. Now you can see pension is restricted to 1,250, because he was earlier a member and not making higher contribution. Now you want to make a higher contribution. Does he have an option for a higher pension? No. This is the situation. So it is continuing. What happened? The over and above the wage ceiling, the entire amount goes to the provident fund account. Okay. Now let us look at the other scenario. Okay. Now we will do one thing. For the same condition, let's select no, and let's have a date here. The date is same, September 2014. I'm sorry. September. Why? See, you can see that color has changed for that. That means it is going to show something else for us. Let's look at it, what it is, right? Let's select. We will also select higher. Here also we are going to select higher. Everywhere we are going to select higher and see how the impact is. We will test it out in all scenarios. Now what happens? You can look at it. Okay. Wages. Now EPS wages is nil, whereas EPF wages remains, because the higher contribution, it's taking the entire wages. There is no problem in it. But whereas EPS wages is nil. Why? Because there was no detail of contribution, so it's no. The date of joining is after 1st September. In the earlier case, its date is prior. That is from 31st August 2014 till whichever period, till to the where 1995, till that period no issues. Okay. Now coming here, if you joining date is 1st September, then the problem comes. The entire EPS is shown as nil. EDLI won't change. There is no impact. The employee contribution remains the same. There is no impact. Whereas pension fund, there is an impact. No, pension will not be paid and pension contribution will not be considered. The entire amount will go to the provident fund account. Clear? Now let's go to the other scenarios. That's why the pink kind of an highlighter I have given there. Okay, it will automatically highlight and give it to you. Now let's go to the next one. Let's say we will select now S. We have looked at all higher. Now we are going to look at the different scenario. Okay, so let's say the date is prior to 2014. Let's look at it. What we are going to select here, we are going to select regular and see how the impact is. Okay, let's see. We will select regular. That means regular. There is no higher pension. In case if it is, so what happens? Earlier he was contributing higher pension. Then he is coming to an establishment where he is contributing on a regular. What will be the situation? The employer is not willing to contribute. They wanted to contribute only on statutory. In that case, what happened? You can look at EPF wages is restricted to wage ceiling. EPS wages is restricted to wage ceiling. Okay. EDLI remains the same. Here there is a change in employee's contribution also, because both are regular only. Normal. Employee also regular only. So this is the normal circumstance under which the employee's contribution will go to provident fund. Employer contribution will be divided into two, and up to wage ceiling, that 1250 will go to the pension fund and balance will go to the provident fund. Clear? Now let us look at the next scenario. So all are regular in that, nothing special in that. Okay. Now we'll say here yes. Now date of joining is, we'll put it as September 14. Okay. Just try, let's test it. Let's test it and see, because we are testing the datas here, right? Then we are going to say regular. What will be the impact? We'll see, because the date of joining is different, right? Let's look at it. What happens? Earlier he was contributing, okay. Now he is date of joining. I am giving what will be the impact. All are regular only. There is no much change. You can look at it. The EPF wages remain same. EPS wages remain same. EDLI of course will not change under any circumstance, provided the wage it is not less than 15,000 rupees. Now you look at it, the contribution, the regular contributions have come about. So date of joining will not have an impact on a regular contribution. Clear? Whether you have been contributing earlier or not, it doesn't matter. Whether you join in a new organization or not, current organization, if where you are working, if it is everything is regular, that means the wage ceiling, nothing, no impact will happen, irrespective of whether your date of joining is prior or after, or you have been earlier contributing or not. Okay, all remains the same. Now let's look at the other scenarios. Okay, so I'm going to say yes, the first option, yes, contributing. Of course, 31st August 2014. Okay, now what happens here? We will do a change. Now the employee is willing to contribute higher. Employer says, no, I am not, sorry, I want to only contribute regular. In that case, obviously, if you select, you have to select no only, correct? Because employer is not willing to make higher contribution. What happens in that scenario? He was contributing earlier higher, and date of joining is also prior to 1st September, that is 31st August 2014. Now current establishment is not willing to pay more than the regular. What will be the situation? EPF wages will be again going back to 35, EPS wages will be restricted to 15, and the contributions will go accordingly. You can look at it. The employee's contribution full on 35 will be going to the provident fund, whereas employer is only willing to provide regular. So in that case, the contribution will be restricted to 15,000. Pension contribution 8.33 on 15,000 is 1,250. Balance is going to the provident fund account. Okay. Okay. Now let's look at the other scenario. Saying yes. Okay. And your joining date is after September 2014. Now let's look at it. What is the situation? Same. He is making higher. He is also willing to make higher. Okay. Right. What can happen? But not willing to make pension contribution. They don't want to do any pension contribution higher. They are restricting themselves. What happens? You look at it. Contribution is restricted to, both are making higher contribution. No, higher? Yes. Higher. Because date of joining, you look at it. He is also making contribution. Date of joining is 1st September. Though higher contribution is making, because there is no higher contribution, they don't want to do it. It is going to be no. So pension EPS will remain as 15. Okay. If you say yes here, then it will change automatically. You can see here it has changed to 35, from 15 to 35. So now in a scenario where you don't want to make any further contribution, you can select here as no. So what happens? Obviously the contributions will be playing around like this. EPF wage is 35, EPS only restricted because you don't want to make a higher PF selection process. You decided not to go for higher. Both employer and employee agree because the contributions both are making higher. Okay, and there is a higher contribution also, but still want to change because they think that the investment plan of getting the money return is much more. So they have opted for a different concept and they have said, no, I don't want a higher pension. They're going back to the normal. In that case, the situation is different and it remains the employee contribution. Employer contribution will be restricted to 15,000 wage ceiling, 1,250, and the entire balance will go to the provident fund account. Fine. Okay, let's look at another scenario. What is the next one? We'll take next one. Say yes, we'll say yes. Date of joining also you can take it as 31st August 14. Okay, now let's look at it. Okay, just look at it. Employee is making regular, employer willing to make higher. What will be the situation? But they don't want to go for pension. What happens? Employer is higher, employee is only on regular. What could be the situation? The situation is, you can look at it. Look at it. Though he is saying regular, the employee, because the employer is making higher contribution, the employee also have to make equal contribution. That is why his EPS wages is 35,000. However, because the pension is not accepted, they want to not to go for pension, then the wage ceiling of EPS comes. However, the contribution of both employer and employee will go to the respective account. Because they have opted for no pension, the wage ceiling impact is on EPS wages and contribution is restricted accordingly. You can try all options here. Everything has been factored. Okay. So that's how it works for you people. Just a moment. Okay. Let's look at the other scenarios. Let's look at one more scenario. Okay, we say yes, date of joining, we have looked at it already. Okay, then the regular, everything is also going to be the same. So let's look at it as, what is the date? You want to give a date, you can give a date and test any other options. You want to test it, we can test it. That's not an issue. Say we'll go for again 31st August 14. Okay, we are saying regular. Okay, here also we are going to say regular, but we are saying please give me higher. Is it possible? Will it have an impact? No. You can look at it irrespective of your option. Earlier he was contributing, but in the current scenario they are contributing on regular basis. Even if you opt for higher pension, you won't get a higher pension because your contribution is going towards this. Now what happens? The situation is, suppose an employee has worked in an organization with higher pension, higher contribution, so pension fund would have gone, contribution would have gone very high. Now coming to the new establishments, the new establishment, there is a provision that they are only contributing for regular. What will be the situation? The entire contribution that has gone to the pension fund over and above the wage ceiling will be retransferred to the provident fund account, and interest will be calculated and credited. The entire that amount, the excess amount will be credited, the interest will be credited, everything will come back to this place. Okay, so this is how this particular Excel works. Now you look at it. I have given you an options here, various options. See what is regular pension maximum. If you want to look at, you can go and look at what does it say. Maximum pensionable salary is restricted to 15,000 per month. Okay, now go back. Statutory coverage, you want to look at what it is. every factory or establishment having 20 or more employees on any day during the year are covered under EPF Act, and minimum 12% contribution have to be paid by the employee and employer on PF wages as per the provisions of the Act. Okay, so let's go back. Now can you import Excel data here? No, I have restricted because it's a trial version. Import is not allowed. Okay, import of Excel data is not available in beta version. You need to purchase alpha version or whatever version that is coming up. A paid version, you will have this feature. Now can we clear data? Yes, of course. Before that, can we generate an ECR? Yes, of course we can generate. Generate ECR text file. Yes. Is input ECR text file created successfully. Let's go and have a look at it. How that file has come about. Just a moment. Very good. You can look at it. Gross wages, PF wages, EPS wages, EDLI wages, employee contribution, employer contribution to the pension fund, balance of the employer contribution going to the provident fund. This is how it goes. NCP days, everything. So this file can be straight away uploaded into the EPFO portal. Okay. Hope it was clear. This tool will definitely help you out to sharpen your skills, test your skills by selecting at various options and then looking at how it can help you in preparing an ECR. So we are going to come up with one more tool. That tool is with respect to the arrear wages paid. In case when the arrear wages is paid, how the PF contribution have to be made, how it should be compared with that particular month ECR that has been already uploaded, how it should be compared with the arrear wages, and the difference between already paid wages and arrear wages, how it impacts the provident fund, all those things. One more tool is coming up. So I will share this particular tool through Google Sheet. Okay, you need to send a mail to our email ID. What is the mail ID? I will share the mail ID to you. Just a moment. So you can send a mail to ilcbala.chennai@gmail.com requesting for that access to use that particular Excel sheet. Through Google Sheet, I will be providing this facility to your email ID. You should have 365, Microsoft 365 or any other version where you can view, download and access this file. This file, you can access it and use it. It will be available for 10 days from the day you start using it. You can test it, check if it is convincing for you, then you can opt for purchasing this. Thank you. We'll see you in another video. Bye.